The 10-cap valuation method is one of many ways to value a company stock to figure out what the target buy price of a stock should be. This is a valuation method that I personally use, one of a few different ones I personally use, and I always incorporate when I'm valuing a stock. The different topics covered in this video, we're going to discuss when did the 10-cap method first originate, why should you use the 10-cap method, when should you use the 10-cap method, and when you should not use this method. I'm also going to show you how to calculate a 10-cap by target price using this method, and we're going to use a live example using Apple stock, ticker symbol AAPL, to do so. So when did the 10-cap first originate? Well, the 10-cap method was mentioned in Phil Town's book called Invested. Phil Town is well known within the investing space. He's come up with 3 different books. In fact, the Rule 1 investing book is one of the best investing books I have ever read myself. I actually took Phil Town's investing course a couple of years ago, and I've tailored a lot of my strategies investing in stocks using his methodology from that book and also that course. Now, Phil Town learned this valuation directly from Warren Buffett when he mentioned the methodology during an annual Berkshire Hathaway meeting. Buffett used this valuation when determining a buy price for land. So Phil Town took the methodology and now applies it to stocks. So why should you use the 10-cap method? Well, it is very easy and simple. In fact, it is one of the easiest and simplest methods you can use to value a company's stock. So which companies are the best companies to use with this particular model? Well, first, I think the best companies to use this model with are blue chip companies. So think of companies that are well established, that are mid to large cap companies. So companies that have a $10 billion market cap or bigger, companies that typically have low to mid, PE, say a P from a 5 to a 15, companies that have generating positive free cash flow and cash flow that is fairly easy to forecast. You're also looking for companies that have slow and steady growth. So essentially they're growing maybe 1% per year to about 10% per year. So you can think of companies maybe like a Walmart would be a really good example of a company used for this type of method. So what company should you not use this particular method with? Well, it would be smaller type companies. So think of companies that are a $1 billion market cap and smaller, companies that typically have very, very high PEs or no PEs at all. They need to have free cash flow. So if they have no free cash flow, this method is not going to work. And particular companies that are growing really fast, say 30, 40, 50% on the top line, this method is not really handy to use with those type of companies. So in order to calculate the 10-cap buy price of a company, you really just need 4 items. The first item is cash from operations, which you can find on the cash flow statement. Item number 2, you need to know the capital expenditures of a business, also found on the cash flow statement. Number 3, you need to know the tax provision of the company, which you can find on the P&L or the income statement. And number 4, you need total shares outstanding for the business. So those are the 4 items. That's it. You have those 4. You can calculate a 10-cap target buy price. Next, let's calculate a 10-cap buy price for a stock. In this particular case, we're going to use Apple stock, ticker symbol AAPL. These numbers are representative of the last trailing 12 months. These are found on the cash flow statement and also the income statement and also the balance sheet. So first, cash from operations, which is about $113 billion for Apple. That should be a positive. Capital expenditures of the business were about $12 billion. That should be a negative. Tax provision for the company was about $16 billion. That one should be positive. If you add those up together, you get total owner's earnings of the business at $117 billion. Next, you need total shares outstanding for the business, which comes to $15 billion. If you take total owner's earnings of 117 billion, divide that by shares outstanding of 15 billion, you get owner's earnings per share of $7.56. Now, to get the 10 cap valuation target buy price, you just multiply that by 10. So that comes to $75.60. So that would be the target buy price using the 10 cap valuation method for Apple stock. So that's how you calculate a 10 cap target buy price. Now, I'm going to throw out there that I do have a Patreon. If you want to know how to value companies, I do teach you how to do so. And I also provide the templates for you as well, including the 10 cap valuation. I also show you how to calculate a intrinsic value of a stock using a discounted operating earnings model. I also show you how to calculate a buy price using the payback method, which is also a Philtown valuation. You get access to my Discord channel as well. There's about 100 different value investors that are on there currently. And you also get access to my Patreon only post. So if you're interested in something like that, I'll put a link in the description below. Love to see you over there if that's something you're interested in. Thank you so much for watching the video. I really appreciate it. I'll catch you guys on the other side. Take care and God bless.